We're moving through the middle of the trading day, and it's time for a quick reset. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to keep clarity through the chaos of these markets. The tone this hour, stock-specific stories are doing more of the talking than macro, with earnings, legal headlines, and geopolitics each pulling on different corners of the tape. Let's start with one of the more eye-catching corporate stories. According to reporting from MarketWatch, GE Vernova is front and center after beating earnings expectations and raising its full-year outlook. The narrative there is all about the grid. Demand for electric grid equipment is building as AI data centers and electrification push power demand higher. But there's a sting in the tail. The wind power business lost a lot more money than feared. Traders will be watching whether the market is willing to pay up for the AI and grid growth story while looking past those wind losses, or whether that drag caps the upside in the near term. In consumer land, Starbucks is another name on the move. MarketWatch highlights that the coffee giant just put up a second straight quarter of growth in sales at stores open at least a year, a key same-store metric. That's exactly what turnaround bulls have been looking for. Evidence that traffic and pricing are stabilizing after a tough stretch. This is one of those prove-it stories. 2 quarters help the narrative, but investors will be watching margin trends and whether this momentum carries into the back half of the year. On the legal front, there's an under-the-radar story with potential ripple effects for housing finance. A MarketWatch report points to a class action lawsuit targeting Rocket Companies, one of the biggest mortgage lenders in the U.S. The allegation, illegally steering homebuyers toward using its own services and away from cheaper alternatives. Traders in financials and housing-related names may see this as another sign that regulatory and legal scrutiny remains an overhang for parts of the mortgage complex. It's also a reminder that even in a friendlier rate environment, business practices can become a headline risk. Let's talk risk, and that means oil. MarketWatch's Myra Safong reports that crude is at a 4-month high after former President Trump renewed threats toward Iran, warning of a massive armada headed toward the country, and suggesting time is running out for a nuclear deal. That's classic geopolitical premium being priced into energy. But the piece also flags that the momentum in crude may be fleeting. So energy traders are walking a tightrope. On one side, higher prices and potential support for energy equities. On the other, the risk that any easing in rhetoric or a surprise supply response knocks that premium out of the market quickly. For broader equities, higher oil is always a question mark for input costs, inflation expectations, and ultimately the Fed narrative, even if we don't have fresh macro data hitting this hour. A couple of other sleepers I'm keeping in the background. One MarketWatch column argues investors should look beyond the S&P 500 to mid-cap stocks, a group that's less pricey and less concentrated than the mega-cap heavy benchmark. That taps into a growing conversation about whether leadership has to broaden out beyond the usual tech titans for this bull move to stay healthy. Professionals will be watching flows into mid-cap funds and whether any relative strength develops there as big tech takes a breather. And on the psychology side of trading, there's a timely reminder from MarketWatch about avoiding revenge trading and other raw emotions. In a tape with more stock-specific landmines and sudden rotations, like we're seeing in earnings season, mindset can be as critical as the stock charts. Intraday swings around names like GE Vernova or any headline-sensitive energy stock can tempt traders to chase losses. The pros will be focused on sticking to risk limits and pre-planned levels instead. Into the next hour, I'll be watching 3 things. Whether GE Vernova stabilizes as the market digests that split story between grid strength and wind weakness, how crude behaves as more details or commentary emerge on the Iran front, and whether this brewing conversation about mid-caps and new momentum plays starts to show up in actual price action. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer.